Sir, you are not audible to students, sir.
Virag, I don't have a virtual background options here. Virag, are you here?
Yes, sir. Sir, I don't know, sir, that you only have to check, sir.
Okay.
That control is don't with me. Yesterday you done, na, sir?
Yeah, yesterday it was there, but today I don't see this. So is it different than in your things?
No, sir. We have same using same every day two times, sir.
I don't know. Anyway, I don't see any virtual background here. Anyway, it's okay. Good morning, everyone. Students, yesterday we stopped at loss by fire. And in loss by fire, we have done only the first part, that is loss of goods.
So your screen is stop, sir.
I don't want screen sharing right now.
Okay, sir. Okay.
Whenever I need, I take it. Uh, is it all right? I'm seen there. Okay.
Yes, sir.
Whenever I need the screen sharing, I'll do it.
Okay.
So students, yesterday we stopped at loss by fire, and in that first part we have done, that is goods lost by fire. Now today we'll do loss of profit. See, yesterday we discussed that when fire happens, lot of things are affected. Our furniture is burned by fire, goods are burned by fire, human life, even premises, and lastly the profit. Because after the fire happens, my business stops working, and once my business stops working for a few days, I am affected due to loss of profit. सीधी बात है, जब बिजनेस ही नहीं है तो प्रॉफिट कहाँ से होगा? See, this all you must have experienced in this lockdown period. In lockdown period, so many businesses got affected. Their businesses were not there, and due to that, their profit got affected. Now this is a natural calamity. Same way, when fire happens, there is a that is also a calamity, and my business gets stopped for a few days. Now, how to find out that how much profit is getting affected? How to find that out? Now that is very important. The thing is, we have to find out very simple way, that is, if I would have been doing a normal business, then how much money I would have made. And since there is a fire, how much money I have made, and difference between these two is a profit or loss, rather loss we have made. So what I have to do is, first I'm explaining you overall view, and then we'll go for all the definitions. The first, I have to find out what is my period of fire. Now, what is period of fire? Suppose say fire happened today, or let's say on 1st of November, and my business got disrupted for 4 months. Means November, December, January, and February. 4 months my business got disrupted. So in these 4 months, I have to find out what is my actual sales has happened. See, my business is not completely stopped. Understand that. My business is going on, but it is going on at a very slow pace, half the pace, or maybe one third of the pace, or maybe only 20%. So business is going on, but it is going at a lower pace. So I have to find out what was the sales which was there in these 4 months. Why I'm saying 4 months? Because fire happened on 1st of November, and regular business came into existence, or regular business came on after 4 months. That is November, December, January, February. 1st March onwards, my regular business started. So till that time, what is my sales and how much profit I have made thereon. Now, how to find out how much profit I have made? Once again, it is based on my GP ratio. GP ratio of past 2 years, 3 years, 5 years. And then I will compare this same 4 months with the previous year. So in the previous year, in this 4 months, how much money I would have made, or how much money I actually made. Let's say my profit made in the previous 4 months, means previous year, in 2019, my profit was, let's say, 2 lakh rupees. And now in these 4 months, I have made profit of only 50,000. That means I made a loss of profit of 1,50,000. So there are certain definitions which we have to go through. I'll share screen with you about the definition part. See here, you can see certain definition. Now, see, this is loss of profit. Now, see, these are certain things which you need to understand. These are very important definitions. And in exam, I'm sure they will strike on this only. The first definition, what is given here is standing charges. Now, what is this standing charges? You need to understand that standing charges are actually the fixed expenses which I have to incur even though there is no business. Like example, in this corona time, you've seen that there are so many offices are shut, businesses are shut, yet some good employers have paid salaries to their employees, irrespective of they are not working. And this is not happening here, it is happening worldwide. In abroad, they say this term as furlough. Means salaries are paid to staff. You can't avoid rent, because rent is someone's income also. For you it is expense, but for someone it is income, and they are living on that. So you can't stop rent, you can't stop government taxes, you can't stop salaries. Assets also get depreciated, and there are so many other fixed expenses which are not connected with the business. And these expenses you have to keep on incurring. In this standing charges, means these fixed expenses, that is also reducing your profit. So even these are also insured. So in these standing charges, you have two types of standing charges. One is an insured standing charges, and second is an uninsured standing charges. Insured standing charges means since you have paid insurance for it, the insurance company will pay these expenses to you, or they will allow this as expenses from your profits. And uninsured means it is not insured, which you have to bear. In the previous part, that is loss of goods, we have seen gross profit ratio is equal to gross profit which is found in trading account So gross profit upon sales into 100. That was my GP ratio. But here my GP ratio is little bit changed, because here I am not taking only trading account. I am taking also profit and loss account. So therefore here my definition is changed, and you can see here the gross profit, this part. I can see this I'm highlighting this figure. See here, you all can see highlighted part. Gross profit means the net profit plus insured standing charges. Gross profit means net profit plus all insured standing charges. This is my gross profit. So this is a different definition which you need to understand, because this can be asked in your MCQs. Second one is an indemnity period. What is this indemnity period? See, what is the meaning of indemnity? The meaning of indemnity is how much period of profit insurance company is, how much profit period you are covered with. So here it's given the period commences at the date of damage and ends not later than stated number of months. So suppose I have insured for 6 months, and suppose I have a loss for 8 months, insurance company won't pay me for 8 months. Insurance company will pay me only for 6 months. So that is called indemnity period. So insurance company, suppose my loss is for 4 months, they'll pay me for 4 months. If it is for 6 months, they'll pay me for 6 months. But if it is for 8 months, they won't pay me for 8 months, they'll pay me only for 6 months. So that is my indemnity period. That is the period with which I have registered or taken insurance. Then standard turnover. See, these terms you need to understand. What is standard turnover? Turnover during that period in the 12 months immediately preceding the damage, date of damage, corresponding with the indemnity period. See, understand this part. There is a difference between the standard turnover and annual turnover. I am discussing this terminologies in detail and slowly. And believe me, in exam, they will strike on this. This is my gut feeling. So please understand carefully. What is the difference between annual turnover and standard turnover? Understand that. Annual turnover is a period of 12 months immediately before the date of damage. And standard turnover means the turnover during that period in the 12 months immediately preceding the date of damage corresponding with the indemnity period. यानी कि suppose fire was there on 1st of November, and it has gone for 4 months, means November, December, January, February. So standard, suppose this is 2020-21. So standard turnover means in these 4 months corresponding to the previous year, means in 2019-20, 1st November 2019 to 28th February 2020 or 29th February 2020, whatever turnover happens for those 4 months is called a standard turnover. Then annual turnover means it's a period of 12 months immediately before the date of damage. Means I work back for 12 months starting from 1st November 2019 to 1st November 2020, that is 12 months. That is my annual turnover. Net profit means profit given as per your profit and loss account. Gross profit, I have explained. It's a net profit plus insured standing charges. Now, so these are the terms which we have to use. See, here the steps are given how to calculate those things. First is given, find out the rate of gross profit after considering trend of business. This trend of business I have discussed with you yesterday. If my gross profit keep on showing increasing trend, I have to take into consideration that way. Like example, if I am considering GP ratio of last 3 years and it is continuously showing increasing trend of 1% every year, let's say in 2017-18 it was 19%, 18-19 it was 20%, 19-20 it was 21%. So I believe that in 1 second, just 1 second. In 2020, 21, it will be 1% more, and that is 22%. So that is taking care of this increasing trend. Then it's given, 1 second. Okay. I'm sorry. There was some disturbance in the house, so I have to shut all the things. Okay. I'll share screen with you. 1 second. So we are discussing about the gross profit. Then we have talked about short sale. Now see, that is what I have explained it to you before we started this topic. Short sale is nothing but standard turnover minus actual turnover of the period of dislocation. Now see, what is this period of dislocation? That also I discussed with you. Dislocation means my business, regular business stopped working, or my business, regular business is work at a very reduced rate. So standard turnover मतलब पिछले साल में यही 4 महीने में, आई रिपीट, पिछले साल में यही 4 महीने में क्या बिजनेस हुआ था, और अभी फायर होने के बाद में ये 4 महीने में क्या बिजनेस हुआ है. Now that's a simple Hindi word I have used. If I use in the English part, the standard turnover means what has happened in 2019-20 in the same 4 months of the period of dislocation. That is called standard turnover. Means 1st November 2019 to 1st March 2020, last year. Whatever turnover has happened, that is called a standard turnover. And actual turnover means what turnover has happened in this first 4 months. So standard turnover minus actual turnover. is called the short sale, यानी इतना मेरा sales कम हुआ है, that is called period of dislocation. Then comes gross profit on short sale. Now what is gross profit? That we have discussed. On this gross profit, gross profit on this short sale, that is my loss of profit. And then I have to use this formula. This formula is also very important. You have to find out the amount of admissible for additional expenses. Now see, what is additional expense? That also you need to understand. जब फायर होती है तो सबसे पहला काम हम करते हैं फायर को स्टॉप करना. And when you want to stop the fire anyhow, there might be some expenses incurred to stop the fire, maybe. Or after fire has happened and after my business is dislocated, क्या करेंगे हम लोग? Think logically. जब बिजनेस बंद हो गया यहाँ पे, तो हम लोग हमारे कस्टमर्स को लॉस्ट नहीं करना चाहते. वी डोंट वांट टू लूज आवर कस्टमर्स. सो व्हाट वी डू, we take out some shop nearby only from my shop on rental basis temporarily for 4 months, 6 months or 1 year. So I take these shops on rent to start my business. So that is called additional expense I have incurred, or some other expense I incurred to keep my business going on a regular basis. So that is called additional expense, and insurance company is willing to pay you this. Why? Because the more business you do, the less loss you will have and less insurance company has to pay you. So therefore insurance company is always ready to pay you this additional expense. But usme bhi, this is the formula, you have to keep it in mind. Actual expense or gross profit on additional sales generated by additional expense, or additional expense into net profit plus insured standing charges upon net profit plus all standing charges. All standing means insured plus uninsured, both. Okay, so this is about the additional expenses, and you have to take whichever is lowest. Then add item 3 and 4. What is 3 and 4? 3 is loss of sale, means loss of profit, and 4 is for additional expenses. That is my total claim I have to make, and then I have to apply the average clause. Now yesterday we discussed about average clause also. So average clause is nothing but we will be getting proportionately less amount because of the lower insurance. So formula is gross claim into policy value upon gross profit on annual turnover. This is a formula we have to use. You have to remember all this formula. The sums you can do it on this, because I think Institute has given a very nice solution also. I have gone through that. So you can go through all of them. And they're quite good sums. I was quite happy with these sums. So you can go through these sums. What is salvage? That we have discussed. Here GP ratio I have discussed with you. Additional expense I have discussed with you. Standard turnover and annual turnover I have discussed with you. Okay, so these are all the sums they are given. Please concentrate on small sums and MCQs. This is my advice to you to crack the exam. Okay, we are starting with the study note number 3, preparation of financial statement of profit oriented organization. यानी जो नॉर्मल हम लोग ट्रेडिंग प्रॉफिट एंड लॉस एंड बैलेंस शीट बनाते हैं वो है. I don't need to discuss much on this, but only one part I want to discuss here is, which is like very few people are aware about. Everyone knows what is bad debt. Bad debt means a debt which is irrecoverable. Means that person has told us that I am definitely not going to give you money. But what is doubtful debt? So doubtful debts are those which may turn out to be bad. May, I'm using that word may turn out to be bad, means not necessarily it may be bad, but since the behavior of the debtor is such that I got a doubt that he may not pay. And according to principle of conservatism or principle of prudence, we have to account for all anticipated losses and not account for anticipated profits. So this is my anticipated loss, expected loss. So I have to provide for in my books of accounts. Now, how to provide? By making a provision. Here, one more thing I want to discuss with you, that is about the provision. So many people are not aware about what is the difference between provisions and reserves. Okay, provision is nothing but we keep certain amount aside for anticipated loss, for anticipated expenses. Like we have a provision for taxation. Now here the purpose is known, but the quantum is not known. Exact quantum is not known. Therefore, we do estimation. Like here also provision for doubtful debt, you must have seen so many times in exam also that provision for doubtful debt is 5% of debtors. Now why 5%? So that 5% is coming from your past year's experience, that more or less around, it can be sometimes 4%, sometimes it can be 6%, but more or less 5% of the debtors turn out to be bad. So we keep that much money aside from my profits to meet these anticipated losses. So that is called provision for doubtful debt. Good debts, you understand what is good debts. Okay. Then we have, I have explained you what is provision for doubtful debt. There are two types of provision for doubtful debt. One is a specific one, like if I can identify certain debtors who are not going to pay me, and if I can't find out that, then I will make a percentage of provisions. Next, then um, see, this is the format which you have to use in exam, which everyone knows actually, but still I just discuss with you. You can see here what I'm just highlighting. First is my debtors. From that, I will minus first bad debt. Means these people are not going to pay me. These people are not, 2000 is not going to pay me. So 98 is going to pay me. Those who are going to pay me, on that I will have doubt. So see here I will have provision for doubtful debt. So on this I will have doubt. So after minusing bad debt, whatever figure comes, on that we calculate doubtful debt. And then whatever final figure is here, that is definitely going to come. But on that also, we have this Indian mentality sometimes that when you make the final payment, they ask for some discount. So I make provision for that also. So provision for discount is here. So first we minus bad debt, then whatever figure comes, on that we calculate doubtful debt, and after that whatever figure comes, on that we calculate discount. Okay. This journal entries you can go through at home. This account is also fine. I straight away go important aspect only. Other aspects you can just go through it because we don't have the time to cover full 600 pages of book. The 600 pages I have to cover in 9 hours. It's a big task. Everyone knows what is balance sheet, trading account, and all, but just a brief idea I will give you. Those who are still not from a commerce background, non-commerce background के लिए I just say preparation of financial statement. In financial statements, we prepare trading, profit and loss, and balance sheet. Trading account consists of anything relating to goods, means opening stock of goods, purchase of goods, sales of goods, closing stock of goods, goods lost by fire, goods lost by theft, goods distributed free sample, goods taken by proprietor. In short, anything relating to goods comes under trading account. This is for a non-commerce background. Even commerce background people also, some people just knows which item goes where, but they are not aware about that what type of item comes here. So first in trading account, we write all items relating to goods, number one. Number two, we write all direct manufacturing expenses. Direct manufacturing expense means expense which is required to convert raw material into a finished products. So that is direct expense. So basically all factory expenses. See here I'm just highlighting this direct expenses. So these are all covered under trading account. From trading account, we get a gross profit. Now why we say gross? Gross means before deducting something, net means after deducting something. We call this as a gross profit because this is not a final profit. There are a lot of other things we have to deduct. Now what are the other things? So that comes under profit and loss account. Now what comes under profit and loss account? So see here, this is only trading account they are explaining. Profit and loss account, we write, according to me, we write three types of expenses: administrative expense, selling expense, and financial expense. I will put it this way, even though they have grouped here as a cost of sale and other expense, but I will put it this type of expenses. One is administrative expense, means expense relating to administration, means office expense like office rent, salary, printing, stationery, postage, telegram. So these are all office expense which comes under profit and loss. Second is a selling expense, means expense which is required to sell the product. Expense which is required to sell the product, like salesman's commission, salesman's traveling, advertisement, publicity. That is selling expense. And last one is a financial expense. Expense relating to finance like interest on borrowed fund, interest on loan, interest on debentures, bank commission, cash discount. So these are all financial expenses. So these three types of expenses comes under profit and loss account. Then we have all other abnormal losses also, that is not actually connected with the production cost, like abnormal losses, loss by fire, loss by theft, and some other non-revenue income also, like which is not connected with my business, that is rent received, commission received, and so on. Okay, so these are other incomes. So from profit and loss account, finally what I get is a net profit. See here, you can see this is a net profit. You all can see that. So from trading account, we get a gross profit. From profit and loss account, we get a net profit or net loss. See here, this side is net loss. You can all see this. So when my expenses are more than income, it's a loss, and vice versa. But it's a final loss or final profit, and that belongs to the proprietor or partners. Okay. Um, Okay. Now, see, you all have, those who are from commerce background and non-commerce background, you all have studied final accounts up till now. And in that, you have prepared three accounts: trading account to get the gross profit, profit and loss account to get a net profit. That net profit belongs to the proprietor. So we used to add in the balance sheet, liability side under capital. We used to write capital less drawings and net profit. Now, if you remember all of this, those were done before. But that was only sole trader. Sole trader means only one person is there who is managing this business. But now he is, there are, it's not sole trader, we have partners. Now see, here I want to discuss few things about partnership. Now those who are making notes, they should make notes like this. Here it's a large crowd, so I can't dictate notes, but you can write down later on from my recorded lectures. I just dictate that notes. First of all, these partnership is governed by Indian Partnership Act, and whatever terms and conditions between partners are there or among partners are there, that is normally mentioned under partnership deed, or which is also known as partnership agreement. But if a particular, or if certain um, issues are not clarified or mentioned in partnership deed, then in that case they have to follow the Indian Partnership Act 1932. So I repeat, most of the terms and conditions are mentioned under partnership deed or partnership agreement. However, if partnership deed or agreement is silent on certain issues, then they have to follow Indian Partnership Act 1932. Now, what it says for few things. Number one, in absence of any information, all partners will share profits and losses equally. I repeat, in absence of any information, all partners will share profits and losses equally. Remember, it is not in their profit sharing, not in their capital ratio. You can't say Mr. A is contributing 10 lakhs, Mr. B is contributing only 1 lakh. So they will be sharing in the ratio of 10 is to 1. No, they will be sharing equally. It's irrespective of whatever capital they have. So all partners will share profits and losses equally. Number one. Number two, in absence of any information, no partners will be given any interest on capital, and no partners will be charged interest on drawings. So interest on capital is not to be given to them, and no interest on drawing should be charged. Third thing, no remuneration in the form of salary, commission, rent, or any other mode will be given to partners when nothing is mentioned in partnership deed. Nothing will be given to them. And the last one, in absence of any information, interest on partner's loan will be given at the rate of 6% per annum. I repeat, interest on partner's loan should be given at the rate of 6% per annum. So this is about partnership. Now, why I am discussing so much about partnership? Because here we have started with partnership segment, and this is one of the biggest segment which is going for 40 marks, 40. So now two more accounts are introduced here. One is profit and loss appropriation account, and second is partners capital account. Okay, it's not mentioned here, but I will mention here. 1 second. Now, what is this profit and loss appropriation account? Let's understand this part. From trading account, we get a gross profit, which goes to profit and loss account. From profit and loss account, we get a net profit, which is a final profit. Now, from this profit, I will give salary to partner, commission to partner. Some amount will be transferred to general reserve. We give interest on capital to partner. We charge interest on drawings to partner. Now, all these adjustments, I can't make it in my profit and loss account because these are not expense or income of my business. It is basically after whatever profit I have earned, how that profit has been distributed or disbursed among partners, that is called appropriation. So appropriation is nothing but how the profit what company has earned has been distributed or disbursed. So we make a separate account after profit and loss, because up to profit and loss this is all business expense. Now in appropriation, it's not business expense. It shows how the profit I have earned is been distributed among partners. See, you can see here some amount is given by way of interest on capital to X, Y, and Z. Then we are given salary to Mr. X, commission to Y, some amount is transferred to reserves. And then after that, whatever the final profit left over 44,325 here, you can see that is a final profit which I distribute among partners in their profit sharing ratio, which is not mentioned, so it's equal. Okay. Now we have partners capital account also, which is not mentioned here. Now I'll discuss with you what is partners capital account and what is the need of it, why it was not needed in sole trader. It was not needed in sole trader because there was only one person and hardly any adjustments were there. But here we got more than two people, means we got three people, four people, or sometime in some partnership we have 10 people. Now, if I will show all adjustment relating to partners in the balance sheet itself, my balance sheet will become too long and not explainable. So I do all these adjustments somewhere else. Like what adjustments? I give interest on capital to partners. I give salary, commission to partners. Partners have withdrawn money, so drawings. Partners, we charge interest on drawings to partners. So all these adjustments are shown under partners capital account. And after making all this adjustment, whatever the final figure is left over, that figure is taken to the balance sheet. So now we make totally 5 ledger accounts, 5 accounts: trading, profit and loss appropriation, partners capital, and balance sheet. See, these are certain terms which are explained here. You can just go through it. What current liabilities comprised of? Just a brief idea. Current liabilities are those liabilities whose life is less than 1 year. And same way, current assets whose life is less than 1 year. Investment, you understand what is investment. Investment is a surplus fund which we have, which is of no use immediately to the business. So we park it somewhere else, so which can generate some additional income. That is investment. Current assets is life less than 1 year's time. Current assets consist of stock, debtors, bills receivable, cash in hand, cash at bank, prepaid expense, and advance to suppliers. Up to here. Uh, so this is the way we show our balance sheet. It's there right in front of you. Left hand side is the liabilities. We show capital, long-term liabilities, loans from banks and institutions. Right hand side we got assets. You can just go through it. I'm just giving you 5 minutes to go through this balance sheet format. Please go through it carefully. Okay, so you all have done it, gone through that. Fine. How to on my screen? 1 second. Okay. Um, you all can see it now, right? Now, this is the type of balance sheet we have here. See, those who want to go through that, like, which item goes where in the trial balance. So that's given here. You can go through that again. Here, one more thing I want to discuss with you. What is this adjustment? Some people must be not aware about what is adjustment. And what is trial balance? We have discussed yesterday, day before yesterday, I think. What is trial balance? Trial balance is prepared by closing all the ledger accounts. So these are nothing but the summary of transactions done during the year. And since it is a summary of transaction done during the years, it has already followed double entry bookkeeping principles. So these items will be given only one effect. What do you mean by effect? Effect means it will appear only one place, either in trading account or in profit and loss account or in balance sheet, any one place. While what is adjustments? Now see, this is what is given down here is adjustments. Adjustments are nothing but these are the items either specifically left out from trial balance for some reason, or it is something which is by mistake left out, or the item which has come up after trial balance is prepared. So since this item is not included in trial balance but it is pertaining to this year, and so I have to include in my books, so it has to follow double entry bookkeeping principle. So all these adjustments will have two effects. So in short, the first rule happens for the final account is all these trial balance items will have one effect, while all these adjustments will have at least two effects. I'm using this word at least two because it can be two or more than two. Okay. Um, so that is first rule. The second rule about the trial balance is I want to discuss with you. See, in trial balance we got debit side and credit side. So all the debit item of trial balance will either appear on debit of trading account, debit of profit and loss account, or balance sheet asset side. I repeat, all the trial balance item will either appear on debit of trading account, debit of profit and loss account, or balance sheet liability side. Same way, all the credit item of trial balance will either appear on credit of trading account, credit of profit and loss account, or balance sheet liability side. The first one I said something different, I think. Debit item goes to debit of trading, debit of profit and loss, or balance sheet asset side. And credit item goes to credit of trading, credit of profit and loss, or balance sheet liability side. If you follow these two rules strictly, the first rule I said about the trial balance and adjustment, and second is about right now I said, if you follow these two rules strictly, your final account has to tally. Okay. Okay. If I find something important, I'll discuss with you. I'm just going through entire book right now. One request to you, if you have any questions or queries arising, you can keep on writing down. I will keep a last half an hour for this question answer session. You can ask me from all of them, and I'm sure everyone can learn from each other's query. I wish I could have done one or two sums with you, but I can't do. See, you can have questions like this also in exam. Like, see, this is what the question answers self-examination is given. Okay, so now see here, one question is there about contingent liability. Now that is also I want to explain, like since it has come in your MCQs, I can see in MCQs. Contingent liabilities are those liabilities which may or may not occur depending on the future events. You people can make these notes because this what I'm teaching you right now is going to be helpful to you, not now but throughout, even in finals and even later on in life. It will be useful to you when you go for interviews. So don't see only from exam point of view, see even future point of view. So see, even I take interviews many times of students and some of the employment purpose, and at the time we strike on fundamentals only. So it's not only examination point of view, but even later on it is useful to you. So please understand this in detail and in depth. So I repeat, you can make notes of it. Contingent liabilities are those which may or may not occur depending on future events. Example, let's say income tax authority has filed a case against us for some demand of 100 crores to my company, that you have not paid this income tax or GST you have not paid or some other tax you have not paid. And I have a dispute. I said, no, I have paid and I'm not supposed to pay. So this dispute is going on in the court of law. And if the court decides in my favor, then I don't have to pay. But if the court decides against me, then I have to pay. So I don't know that what will happen to me. So this is called a contingent liability, which may or may not occur depending on the future event. Like this, there are 5 to 6 items are there. I'll give you example of each one. First one I've given you when the court case is pending. Second one is if I have given guarantee to someone on behalf of someone. Let's say you have given guarantee about your friend to the bank. Now what is guarantee? That if your friend fails to pay, then you will pay up to the bank. So now you don't know what your friend is going to do in future. If your friend pays completely, then you are not liable. But if friend doesn't pay, then since you have given a guarantee, you have to pay for it. You can see recently it happened with Anil Ambani. Anil Ambani didn't have a sufficient asset to pay to the Chinese borrowers. The Chinese people, Chinese company, Chinese bank said that if he cannot pay, then obviously he has given a personal guarantee also, and from that personal guarantee he has to pay us. So it was a personal guarantee which they have invoked right now. So this is a contingent liability. Same way, suppose you discounted the bill. Now what is discounting of the bill, which we were discussed yesterday? You have given bills of exchange to bank and bank has given you money on the condition that bank will be paid on due date by DROI. Now if DROI honors the bill, if DROI pays, then you don't have to pay. But if DROI refuses to pay, means if DROI dishonors, then you are liable to pay to the bank. So this is also contingent liability. You don't know what DROI will do on the last day. So there are so many contingent liabilities are there. But contingent liability, remember, I have not agreed to this as my liability. Therefore, I cannot show on my liability side of the balance sheet. Because if I show on my liability side of the balance sheet, that means I am agreeing to the liability, which I am not. So I am not agreeing to the liabilities. Therefore, I can't show on the liability side. So here's 4 options are given. On the liability side, no. On the asset side, no, out of question. As a note in balance sheet, yes. I will show this as note in my balance sheet. Below the balance sheet, I will write a note that following is my contingent liability. See, that's why I'm saying that you must know the fundamentals. If you know fundamentals, you will be immediately able to answer. Papers are not at all difficult. You find paper difficult because you lack fundamentals. If you know something, how will you find paper difficult? Okay. Then see, next part is asked bad debts recovered. It will be, now what is bad debt recovered? You know that. Once the bad debt has happened, means that person has not paid you, and after some time, so you are written off as bad in your balance sheet, in your P&L. But now after a few years, he realized that I want to pay this guy, and he pays us. So that is called bad debt recovered. Bad debt recovered is my miscellaneous income. So it's given credited to bad debt account, wrong. Credited to debtor's personal account, wrong. Because my journal entry is cash or bank account debit to bad debt recovered account. So it's given credited to bad debt recovered account. That's correct answer. That's the correct answer. Just 1 minute. Okay, so we discussed about contingent liabilities. Then we have bad debt recovered also. So answer is credited to bad debt recovered account. Next part. See, your journal entry base, your fundamentals, everything should be powerful to answer this. Believe me, exam mein, these things are not that difficult. Okay. Um, um, See, later on in this question answer sessions, if you find any adjustments difficult on final accounts, you can ask me, because all adjustments won't be possible for us to discuss out here. But you can ask me in your Okay. So what we have studied is only about um, profit making organization. You please do the sums on it, and if you have queries, then you can bring it to me later on in the question answer sessions, or later on in the another session if we arrange it. Now we are going for the next part, and that is preparation of financial statement of non-profit organizations. Now, what is non-profit organizations? See, understand one thing, non-profit organization is nothing but the main purpose of that organization is not to make profit. The main purpose is not to make profit. They are working only for philanthropic purpose, or they are working for charitable purpose, or they are working for the benefit of the members. Like example, I'll give you, schools and colleges are not working for profit making. Remember, they are taking fees from you, but most of the schools are taking hardly any fees. Most of the schools are running for charitable purpose. In the sense, no doubt there are private schools nowadays, and private schools are more, and they are charging you a bomb fee. But that's a private school, and their main motive is to make profit. But there are certain schools and colleges whose main aim is not to make profit. There are certain charitable institutions, they recover money from members only for the purpose of recovering their cost. You can go to some clubs or some members associations, like example, the society in which you stay, the building, cooperative society. Now see, what is that cooperative society? That cooperative society is also not for making profit. They are recovering from you only the maintenance cost which they are incurring to maintain the building. So these are all working for non-profit organization. And since it's a non-profit organization, their aim is not to make profit. So in their books, we don't make profit and loss account. Instead of that, we make another account called income and expenditure account. Because accounts to banana padega. Without accounts, no organization can work. Wherever any financial transactions are there, we have to prepare accounts. And not only that, but after the completion of year, they have to present their financial statements to their members or to their owners, whoever. So now, what were things we have in this non-profit organization? So we have, first we prepare income and expenditure account and not profit and loss account. That is one. Second thing, what item we get? Understand this. Say, let's suppose we have a charitable institutions or a clubs or members society. Then we have donations. That's a major income. Entrance fees, like any member who comes first time in the organization, we charge him entrance fees. And then we have subscription. Now, what is subscription? Subscription can be of two types. Annually, they pay. It's like annual maintenance fees. And grants received. Grants is nothing but one sort of help received from governments usually. So these are all the incomes. Now expenses we have, like upkeep of grounds. Like suppose we have a clubhouse, so you have the that's a playground. Expenses, prizes, events. So all these expenses are there. Okay. Now here it's explained what is entrance fees, what is donations. One thing you may not be aware about is a legacy. Now what is this legacy? So legacy is जिसे हम लोग हिंदी में वारसाई हक बोलते हैं या वारसा बोलते हैं. यानी if somebody expires and he doesn't have any or by his what you call will or by his deed, he has transferred all his properties in favor of the clubs. See, it's given here. Many times trusts are formed in the memory of certain persons by their will. In such case, after the demise of the person, the funds passes on to the institution, and such legacies are, of course, one time and therefore should be taken to the capital fund. So this happens only once. When the person expires, we get his properties or money, and that will be used um, only as a corpus of the institution. Um, Life membership fees also, some people pay for full life. Subscription is for the annual. Okay. Now see here, we make first is receipt and payment account. Now what is receipt and payment account? So receipt and payment account is just like a cash book. Receipt and payment is just like a cash book. Receipt side, you write whatever money we receive. Payment side, what we pay. Remember, all we receive is not my income, and all you pay is not my expense. Whatever you receive, maybe some amount you receive for sale of assets, that is capital receipt. And payment also, maybe some payments I have made, but not for this year, it may be for the next year. So this is there. And one more thing here, this is also very important part is this. See, read this. I'm just highlighting you if possible. Um, it's a summary of cash book. That is one. Here, it's a summary of cash book. And second thing, it follows the rule of real account. So in exam, if they ask you the MCQs, so it follows real account. It's not nominal, not personal. It follows a real account because it's just like a cash account. Okay. Then we have another is the income and expenditure account, and it follows here. It follows the nominal account because here we write debit all expenses and losses, credit all incomes and gains. So all expense will be recorded on the debit side, all income will be on the credit side. Okay. So this is about that, and mm, 1 second. See, what is the difference between receipt and payment and income expenditure? You must go through it carefully. I'm giving you 2 minutes to go through 10 points because that can be asked in exam, and that's very important. Please go through it. I'm just giving you 2 minutes to read it. Okay, so you all finished this part. Now see, let's go ahead. There is a capital fund which is it's nothing but just like a capital, and we discuss about donations, legacy, entrance fees, admission fees, subscriptions. Subscription is every time it's annual. वाले बंद कर. Um, See here, you have to be very, very careful about this prepaid and outstanding. Now that is very important. Since ages, people have that habit to write outstanding expense on the liability side and prepaid expense on the asset side. Now that's true, but they are expense. But in this, you will find pre-received income. You find income. So if it's an outstanding income, means income receivable. Income receivable, that is your asset, and pre-received income means income received in advance is your liability. So that you have to keep it in mind. That's very simple and very important. Outstanding expense are liability, but outstanding income is asset. And same way, prepaid expense is asset, so pre-received income is liability. Okay. Remaining all things are same. It's not changing anytime. I don't find any new items in this. Okay, now see, this is true or false and all. Now see here, like look at this certain thing which I want to discuss with you, whether you will understand this or not. Um, See here, in case of non-profit organization, donation received by organizations are reflected in income expenditure, capital account, recipient payment, none of the above. So you have to be there, like what you have to write. Here also it's given which of the following items are shown in the income expenditure account. So it's shown only items of capital, only revenue. So obviously it's only the revenue item which you have to show, and that too also pertaining to the period of accounts. It's given only items of revenue which are received during the period of accounts. No, it's not. I told you whatever you receive, not necessarily it is my income. Only items revenue nature pertaining to the period of accounts. I don't write uh, in receipt and payment. I write of any period, but in income expenditure I write only for the period pertaining to this accounts. Next. Now see, this type of sums can also come to you. Salary debited to income expenditure account for the year was 48,000. Outstanding salary paid in the beginning of the year, amount outstanding salary at the end of the year is 6,000 and 7,500 respectively. The amount of salary to be shown in recipient payment will be what? Now see, this is reverse. This is what you need to understand. Normally, whatever you receive in that current year outstanding we add and last year outstanding we minus. But when I have to work reverse, the current year outstanding we minus and last year we add. Current year outstanding we minus and last year we add. So 7,500 we minus and 6,000 we add. So net 1,500 we minus. So answer will be 46,500. So there are so many things which are given here. You can go through that. Now see, it's given here. Receipt and payment account generally begins with what? Credit balance, debit balance, both debit and credit balance, none of the above. The answer is debit balance. Receipt and payment account always, because receipt and payment is like a cash book, and cash book always have debit balance. It can't have a credit balance. Okay. Then we have a true and false. Please do all these things which is necessary. Okay. Now we have one more study note, that is preparation of financial statement from incomplete records. Uh, I think we'll take 5-10 minutes break, then we'll start. Virak sir,
Okay, sir.
you can have 5-10 minutes break now and then we can start.
Okay, sir. Yeah.
Welcome back, all of you. And let's start with financial statement of incomplete records. Are you all here? Okay. First of all, what is incomplete records that you need to understand? This is popularly known as single entry also. You have been doing single entry since many times. Now, what is single entry that you need to understand? It's actually not, some people write it single entry system. Actually, it is not a system at all. Single entry is nothing but other than double entry. When we started with the uh, syllabus, I told you that we follow the dual aspect concept. That means every debit will have a corresponding credit of equal amounts, and that is double entry bookkeeping system. For your general knowledge, this system was started from Italy, and now it is spread all over the world. Everybody follows the same system, whether it's a USA or Australia, Canada, UK. Everyone is following this double entry bookkeeping system. Now, what is single entry system or what is accounts of incomplete records? There are people who does not have accountancy knowledge very well, so they are not maintaining accounts in a systematic manner. So they maintain accounts in their own way. Like example, there is a kirana merchant who know how to do business, vada pav wala, dosa wala, the people who are standing on the road to sell their products. Now these people know their small hisab. Hisab matlab chota sa account, like this much goods they have purchased, this much goods they have sold, this much they have to pay to someone, this much they have to pay to someone, this much is my expenses. So all this thing he is writing in a small diary, but they are not in an organized manner. Now what is the need of this organized accounts? The need of organized accounts is when you expand your business. You have to file your income tax returns, GST returns. You have to borrow money. You have to go to bank or financial institutions where you need the full-fledged final accounts. When you need your full-fledged financial statements, at that time you need a proper, complete books of accounts and records. Now, in this topic, we'll be learning about how to. Vanjari sir, am I audible? Vanjari sir, is he there? Virag, am I audible? Virag? Okay, sorry for the interruption. So we are going to help these small traders to complete their records, which they have maintained in a single entry form. So we can say, we can't say actually a single entry, but it's an incomplete record, which will help them to convert into a full-fledged double entry bookkeeping system. Now, how to convert that? Remember, to help someone to complete his record, first of all, we should be very clear about. Okay, so we'll help the small traders to complete their incomplete records into a full-fledged double entry bookkeeping system. We'll prepare a full-fledged final accounts, and remember one thing: to help someone, our fundamental has to be more clear, then only we can help him. So that is one. Second thing is, remember, single entry is maintained by a small traders, not like big organizations, because big organizations always have their full-fledged accountancy department and full-fledged accounts they have. So normally you find this type of things with the small traders. Another thing is, they maintain a cash book, small cash book, and they always keep only the personal accounts with them. Personal accounts means, as I told you, how much money they have to recover from someone, how much they have to pay to someone. Um, they have lack of uniformity. They don't follow the full-fledged accounting standards, accounting practices, and therefore it is difficult to prepare their final accounts. So here they have given you the difference between single entry and double entry system, which you can read at home. So that's not needed right now. Now there are two methods of preparing this financial statement. One is known as the statement of affairs method, which normally doesn't come in our exam, and second is a conversion method. Now first one is statement of affair method. Means here main purpose is to ascertain the profit or loss of the organization or of the person. So here it is given capital, less capital at the beginning, add drawings. Now this particular format you already done, I think, in 11th or 12th standard in your commerce. So that is one. Second thing is, this is a statement of affairs method. So here you will be given all assets and liabilities. You have to prepare two balance sheets, one at the beginning of the year, second at the end of the year. And and with the help of, like, say, we prepare opening balance sheet to ascertain the opening capital. We prepare closing balance sheet to ascertain closing capital, and then we prepare this statement of affairs or statement of profit and loss, which is this. There is second method which I told you is a conversion method. That is conversion of single entry into a double entry. Now this is actually the real method, you can say, which will help you to um, convert the loose data into a full-fledged trading profit and loss and balance sheet. Now what accounts we prepare in this? So that I'll explain. Actually speaking, we need to prepare totally around 9 accounts. That is like debtors account, creditors account, bills receivable account, bills payable account if it's there. Then opening balance sheet, cash book, trading profit and loss, and closing balance sheet. So this is the way we prepare. Okay. So I told you we prepare so many accounts. Like we prepare from this. Like here we have bill receivable, bills payable, all. So here each and every item will be given two effects. Each and every item will be given two effects. That is since we are converting this single entry into double one, each and every item will be having two effects. We prepare debtors account, bill receivable account, bills payable account, creditors account. Okay. Opening balance sheet we prepare, and then we prepare see, like here we are given details relating to the year's transactions. So these are all transactions for the year, entire year, and each and every item will have two effects. Now, when you do a lot of sums, you will come to know we don't have much time to do the sum out here. I'll just cover up whatever I can. Now, this exercise we have reached to. Okay, now we have reached to the partnership form. Partnership. We have discussed what is partnership at the time of final accounts. Now we are entering into another part, that is admission of a partner, retirement, death, dissolution, insolvency, amalgamation, conversion. See, there are 7 topics in this. Even if I spend half an hour on each topic, it will take 3.5 hours. So, sorry, but I can't complete in 9 hours your entire syllabus. First of all, admission of a partner. Now, there are certain things which you have to keep it in mind, that uh, first of all, what is the need of new partner to be admitted? What is the need of it? So, we need new partners for dividing the risk, for additional capital, for additional expertise, for a helping hand, for administration, and so many purposes we need additional partner. Now, when new partner comes in, there are 5 things which you have to keep it in mind. Now, that may not be written in the textbook, but I'll explain it to you. The first thing, what is important is, there are 5 points you have to keep it in mind. The first thing is that when the new partner comes in, first of all, how much capital he will bring it into the business. That is one. Second thing, what will be his profit sharing ratio? Third thing, what is his profit sharing ratio? That is one thing. Not only his profit sharing ratio, but after his admission, what will be the new profit sharing ratio of the other partners? So first thing is how much capital he will come with. Second thing is what will be his profit sharing ratio. Third thing is goodwill. Now we have discussed what is goodwill. Goodwill is a good name or reputation of a company, and due to goodwill, the company is earning a super profit. Super profit means they are earning more than a normal profit. Now, you know that the goodwill or the good name of a company is not created overnight. It takes many years. Suppose say there are 2 partners, A and B, and they have worked very hard in last 20 years to make this good name of a company, because of which now today company is earning a super profit. And today Mr. C is admitted into the partnership firm, and from day one he will start enjoying the fruits of super profit. Is it justified? No. So therefore, when the new partner comes into the business, along with capital, over and above capital, he will also bring some additional amount by way of goodwill to compensate the old partners for whatever sacrifice they have done. Now, what is sacrifice? Suppose earlier A and B were sharing 50-50, and after C comes in, the ratio has become 40-40 and 20. That means A and B, they both have contributed. Instead of their 50%, now it has become 40%. So they both have contributed 10-10%. So you can say they both have sacrificed 10-10%. And once they sacrifice, we have to compensate for whatever sacrifice they have done. And therefore, goodwill is always distributed among old partners in their sacrificing ratio. Goodwill is distributed among old partners in their sacrificing ratio. And what is sacrificing ratio? The sacrificing ratio is equal to old ratio minus new ratio. So their old ratio was 50%, new ratio is 40%, so their sacrifice is 10%. So they both are sacrificing 10-10%. That means they both are sacrificing equally. Therefore, goodwill should be distributed among them in their equal ratio in this particular example. So 3 things I have discussed. First, how much capital he will bring. Second is how much profit sharing ratio will be offered to him. Third is what will be the goodwill he will bring it into the business. Then fourth thing, distribution of accumulated reserves. Now, what is reserve, that you already know. It is the undistributed profit lying in the business for some bad days or some bad thing, unforeseen events. जैसे अभी ये अपना कोविड-19 जो हुआ है अभी, दिस इज अनफोर्सिंग इवेंट्स. जिसने भी कुछ पैसे बचा के रखे हैं वो इसमें सर्वाइव होता है. जिसने अपनी बचत या कुछ रिजर्व में नहीं रखा है उनको बहुत सारी तकलीफें होती है. सो देयरफॉर even the business also saves some money from their profits every year, and um, after the new partner comes in, even he will share in these reserves. But that's not correct, because this reserves is built up by old partners for their own, from their own profits, which they have not distributed to themselves. So we cannot give it to the new partner. Hence, before the new partner comes in, the reserves should be distributed among old partners in their old ratio. Okay. And the last part is revaluation of assets and liabilities. Revaluation of assets and liabilities. Now, what is that? What is the need of revaluation of assets and liabilities? So the need is, suppose say two partners A and B, they purchase a piece of land in Mumbai for just 10 lakh rupees 20 years back. Now after appreciation of 20 years mein, that 10 lakh wala land has become 50 lakhs today. After the new partner is admitted, and if we start selling this property off, I will make a profit of 40 lakhs. In that 40 lakhs, even new partners also will share. But is it correct? No, it is not correct, because this particular investment was done by old partners. So new partners should not benefit unnecessarily. Therefore, we have to bring the value of this land in my books from 10 lakh to 50 lakhs. That means I have to revalue the asset, and on such revaluation, whatever profit I make, that should be distributed among old partners. So basically, we have to revalue all the assets and we have to revalue all the liabilities, and whatever the profit or loss is generated on this will be distributed among old partners in their old profit sharing ratio. And the purpose of revaluation is the new partner neither benefit nor loses unnecessarily. So 5 points I repeat once again, which you have to keep it in mind before the new partner comes in. First is how much capital he will bring. Second is what will be their profit sharing ratio, what will be offered to him, as well as after his uh, admission, what will be the new profit sharing ratio for all three partners. Third thing is goodwill. Fourth thing is distribution of accumulated reserves. And fifth thing is revaluation of assets and liabilities. Now, all this should be done before the new partner comes in. So this is what is about admission of a partner. Same treatment is for retirement. In admission, new partner comes in. In retirement, one partner goes out. We prepare same number of accounts in this. See, there are certain examples given here about how to calculate profit sharing ratio and sacrificing ratio. This is all given. You can just go through that. Now see, I have explained you what is goodwill part. So here there is no need to read. You can just see how it is to be done. But journal entries are very important. So please go through the journal entries, which are really important. So we make 5 ledger accounts in this. I make at least 5 ledger accounts. One is a revaluation account, which is also known as a profit and loss adjustment account. It follows the simple rules of debit all expenses and losses, credit all incomes and gain. So if there is any expense or loss, I will write on the debit side. If there is any income or gain, I will write on the credit side. So that is revaluation of assets and liabilities. So that is a revaluation account. Then I make cash and bank account, I make goodwill account, I make partners capital account, and then I make revise or new balance sheet. Okay. Here also we have something regarding goodwill. For goodwill, we have two types. One is goodwill is brought in cash, and second is goodwill is not brought in cash. Both the journal entries are given on the top. Please just go through that journal entries. See, in admission, we have 2 old partners and 3 new partners, while in retirement, it's a reverse case. Um, okay, so in retirement also, we have the same thing. First, we have to do revaluation of assets and liabilities, as I told you. Then we have adjustment regarding goodwill. As I told you, when goodwill is not brought in cash, we have to raise goodwill in the books, and then you have to write it off. When you raise the goodwill, entry will be goodwill account debit to old partners, old ratio, and when you write it off, it will be new partners, new ratio to goodwill. Remember, raising of the goodwill is compulsory. Writing it off is not compulsory. It is to be passed only if the book says so. Hmm. I don't find anything new. You have to just go through these sums. Okay. Um, okay. Then we go for actually dissolution of partnership form. 1 second, where is it? Retirement is already done. Uh, this is admission. Okay. Now this is regarding the dissolution of partnership firm. In dissolution, what we do, you need to understand that also. In dissolution of partnership firm, we sell off all our assets in the market. We shut down the business. Whatever money we get from that, we pay off our liabilities. Now that sounds very simple. Here we prepare only three accounts. First is realization account. Second is uh, partners capital account, and third one is cash and bank account. We don't need goodwill account because when the firm is getting shut, there is no goodwill. We don't need new balance sheet because when all assets and all liabilities are sold off, we don't need any assets and liabilities as such. Part of the dissolution, we have one chapter that is called piecemeal distribution. Now, what is this piecemeal distribution? Piecemeal distribution is that where, see, I told you it sounds very simple that you sell off all the assets in the market and you pay off all the liabilities. But practically speaking, I'm not going to sell all the assets in one single day. Today, suppose I want to sell one property. Is it possible that if I decide in the morning, then by evening it is sold off? No, it's not possible. So we sell all these assets gradually. And once the assets are sold gradually, that means even the liabilities are also paid gradually, slowly. Liabilities are paid gradually and slowly. The question is, which liabilities will be paid first? So that is the topic about our piecemeal distribution. Piecemeal distribution. Piece means टुकड़ों में, किस्तों में. Meal मतलब खाना we are getting in pieces. Whatever we are getting in pieces, we distribute in pieces. Now the question is how we distribute. So we distribute this way. This is the order. First, we pay realization expenses. Second is we make for provision for expenses that are likely to be made, that is contingent. Third is preferential creditors. Now, what is preferential creditors that you need to understand? Preferential creditors are primarily, they are unsecured. They are not secured. They are unsecured creditors, but they are supposed to be paid under any act to government, like income tax, GST, or payment of wages under Payment of Wages Act. So any payment to be done under Payment of Wages Act or payment of anything will come under preferential creditors. Then we have a secured creditors. What is secured creditors? Secured creditors is a creditor secured against some assets of the company. Okay. Then we have unsecured creditors like creditors, bills payable, outstanding expenses. They are unsecured. Then we pay, these are all outsiders. Then we pay to insiders, that is partners loan. And then we pay to partners capital. So this is the entire method. There are various methods we have. The first method is known as a surplus capital method, which is also known as a excess capital method or quotient method. And the second method is known as notional loss method, which we have here. Notional loss method or excess capital. Here. See, the first method is surplus capital method, or also known as a proportionate capital method or highest relative capital method. The second one is notional loss method or maximum loss method. That's a formula. Okay, Virat sir, can we have now question answer sessions? Virat sir, can we have question answer session now? Sir, can we allow people to come in for a question answer session?
Virat sir. विराट सर
चौदहवीं क्वेश्चन आंसर क्या जाएगा? एक प्रकार की क्या है?
Sir, he's talking on another line.
Can you allow anyone to join this? We can allow them.
That link we have to provide na to
Yes,
them.
Bhandari sir.
हाँ सर क्वेश्चन आंसर स्टार्ट करना चाहते हैं सर. Queries from the student.
Anjali, you are asking about over and undervaluation of opening stock in what, which topic? First, you must write the topic. Are you talking about fire insurance? Financial statements of what? Consignment and Kartika, consignment and branch, there is a clear difference. Consignment is my agent, branch is my own premises, my own extension. So the possession and ownership is both with the branch, while in consignment it is not. Uh, See here, now Monica, you asked me about the non-profit organizations. We have to write in my income side only the income for the current year. Income of the current year should be written. That means whatever is of the previous year, whatever is of the next year, that should be deducted. Suppose I am preparing accounts for 2020. So 2019 or 18 will be deducted, and 2021 or 22 will be deducted. That is one. Treatment of opening and closing means what? Opening subscription, if it's outstanding, will go to opening balance sheet, closing will go to closing balance sheet, and opening subscription outstanding will be added to the current year. Branch account is brief impossible. No, practical question is not possible dear now, because in this many time we can't cover a lot of things, very frankly speaking. In 9 hours I have to complete around 27 topics, plus I have to cover your question answer, so it's not possible to do any sums here. But one thing I can tell you, that branch, what you want to understand, like there is subscription of non-profit. What is that? What do you want to ask about subscription of non-profit? Drona, you are asking subscription of non-profit. What is that about? See, admission come retirement was there only for your practical sum point of view. As far as your MCQs or small question point of view, it may not be that important. Aishwarya, yesterday also I told that I will request the management to take one more extra or whatever lectures, but it depends on them. Anyone else? See, whatever we could try, we have done it. You notice that non-stop I'm speaking. This much I can't speak. You know, any human being will get tired by speaking continuously for 3 hours. In partnership, this admission, retirement, death, and piecemeal distribution, all are important. Archana, these are all important. We prepare memorandum revaluation to get the revised values, new values, and to find out the profit or loss on revaluation. Partner bring his own goodwill means he brings goodwill in cash. So entry will be cash account debit to goodwill account. First entry. See, entries I have already told you that entries are there in the books. but still, cash account debit to goodwill account is the first entry. Second entry is we distribute goodwill among old partners, so goodwill account debit to old partners, old ratio. And then third is if they withdraw goodwill, then goodwill account debit to new partners account debit to cash. That is the entry. Advance subscription received goes on the liability side. Yes. Then what? I've already explained this annual turnover and standard turnover. Monica, you have not heard about it. I've explained very clearly and I have drawn your attention also before that. Yes, Rahul, the treatment is same. Treatment is same. What about accounting standard means? I didn't get you. What do you want to ask? Accounting standards. Archana, you are asking me about accounting standard. Which accounting standard you are asking? All chapters are important. Aishwarya, you are asking me every day, higher purchase important. All are important. This is a professional exam. This is not BCom exam. BCom exam, you can leave out the subjects or topics. You can't leave out any topic in professional exam. All topics are important. Entire 600 pages are important. Virag, you muted me. Okay, now what is given? What you are asking? Bad debt provision for bad debt is given in balance sheet. What are you asking? In adjustment also given provision for bad debt 5%. How to calculate debtors? See, whatever is given in adjustment, that only we have to calculate. Whatever is given in trial balance will come under profit and loss account. Bad debt provision. Uh, what is FS in incomplete record? What is FS? Why we take capital in trading account? Which capital we take in trading account? Which capital we take in trading account? Ankita, I am not understanding your question. Ankita, I am not understanding your question. What is FS? Capital account never comes under trading account. I don't know about illustration 3 right now. Capital doesn't come under trade. Oh yeah, you must be talking about incomplete record, the balancing figure. Okay. So balancing figure, they must have assumed that much capital he has brought into the business. That is what they must have assumed. It doesn't come under trading account, but it must be assumed that this must be withdrawn by him as some goods. Goods must be withdrawn by him. That must be given a trading account. Otherwise, capital doesn't come in trading account. It's basically drawings. Endowments is one sort of donation only. It's nothing like that. But if it's a regular one, recurring, then it will be coming under income side. Endowments. Okay. Who else? Maximum loss, you have to actually do the calculation. Now, without calculation, I can't explain Bhavani. Because actual calculation you have to show, you have to do by that preparing the statement and all. Then you come to know. Uh, Nishal, what is it about capital receipt? What is capital receipt? Inherent goodwill is nothing but you have to just like goodwill is raised in the books. Nobody brings goodwill into the cash. So we have to pass separate entry like goodwill account debit to old partners, old ratio. That is the entry we pass. Endowment is a capital receipt or it could be a revenue receipt. It depends on nature to nature. Like sometime in exam also they give you like entrance fee. Now normally when nothing is mentioned, entrance fees is my capital receipt, but they say entrance fees is not to be capitalized, means they can take it as a revenue also. Anyone else? Anyone else want to ask any questions? Royalties in what context? See, you have to ask me about the topic also. Royalty in what context? Royalty you're asking about the trading profit and loss, or royalty where you are asking royalties about? Anjana, you're asking me about royalty. What is it? In what context? See, I'll just explain you general, Anjana, like royalty on production is a trading account, royalty on sales will go to profit and loss account, and only royalty will go to trading account, and royalty received will go to profit and loss credit side. Now that is what the final accounts royalty I can say. And royalty is nothing but one sort of reward or remuneration you get it for using intangible assets or intangible rights. Pooja, I ask you, under overvaluation for what? Is it fire insurance claim you are asking or something else? You to be specific about the topic, which topic you want to ask about. If it is over and under, no, Archana, your question, yeah, it's not important. Rahul, there is a journal entry is given for both the types when goodwill is brought in cash and when goodwill is not brought in cash. Please refer to that. Anyone else? See, when there is a overvaluation, you bring it down, it's a loss to you. When it's undervaluation, you bring it up, it's a profit to you. That's the treatment you have to give in the memorandum. And once again, I'm telling you, don't go too much into the sums part. Always do MCQs given behind the chapter, inside the chapter, last year's papers, that way. Okay, anyone else? Yeah, Tejal, there are sums where all partners are insolvent. So in that case, we make a separate creditors account. We don't transfer creditors to realization account, and there is a separate treatment given. But that I can explain only by doing the sum. Okay, anyone else? Regarding this online tables and all, everything will be given to you, the guidance. So that is when the exam will be announced, it will be told, it will be explained to you how you can draw tables. Most probably it will be more of a MCQs type, so writing part will be very less. Thank you, Anjali. Thank you, Bhavini. Komal, I don't think so. There'll be 15 mark sums in the exam. Yes, Pooja, I will try. I will try. Anyone else? Okay, so I will end the meeting out here today.